Hello, hello, hello. How is everyone doing? How is everyone doing? So, welcome to another stream, guys. A very, very good afternoon to each and every one of you. Wherever you are, you can take your goods based on that. If it's evening, morning, night, very, very of that to you guys. Now, the topic of the stream. For once, I did not ask ChatGPT to give me a clickbait, and I was like, what is happening in the market? Right? And I created it myself. This move usually trap traders. Now, why do I say that? I asked this morning in our chat group, in the mentees chat, what are you expecting from the price? Now, not many replies came because people were either working or busy, but 2 replies came. One from Kumar, one from Hamza. One of them wanted higher prices, one of them wanted lower prices. That in itself told me what the market wants to do without seeing the charts. Same price action, 2 good traders watching, and both of them do not know where the market wants to go and do not agree with each other. That means there's uncertainty. And that's a sort of price action which will trap traders and which will make sure that you do not really know where the market wants to go. Now, we will trade today based off that, but let's first run through where we are, what's really going on, and what can happen. All right. Again, we are still in this nice little fair value gap on the weekly time frame. On the monthly, there is a fair value gap as well. So let's just mark it out. So there's a monthly fair value gap. We are having a nice bounce out of it. Now, the monthly fair value gap is also an acceleration gap. We haven't reached the target of that acceleration gap. The 200 to 50% has not been touched. We got rejected after the 100% extension. So the price could very well come back, retest everything, and then go back higher. Could possibly happen. Month end date. So this candle is ugly as fuck. Okay, it looks shit. You don't want to see these sort of candles. But every time you look at the charts, you should sometimes see what the history says. A shit looking monthly candle, yes, cleared downwards, but a bullish close. Shit looking monthly candle, upwards trend. Shit looking monthly candles, upwards trend. Shit looking monthly candle, upwards trend. Every time you see this sort of price action, you kind of get a clarity that every time there's a shit looking monthly candle, you can expect some sort of a reversal. Why? Because these are stock markets after all. And the tendency of stock markets is to go higher. It's not to go lower. It will correct itself, but to a certain extent. Okay. So let's go back to the elephant in the room. On the weekly chart, we have a unicorn model in play. There's an order block. There's a fair value gap. Price has tapped into the fair value gap. It's reacting bullishly as of now. No confirmation. Still 3 more days to go to the weekly close. So you cannot really say the unicorn model is active. How would I say that the unicorn model is active? Once we basically engulf this candle or close above the high of this candle, will be a confirmation for me that, okay, unicorn model is active. So I would say a close above $24,000 is something that I'll be looking for me to turn bullish on the weekly chart now. That's one thing. Number 2, on the daily chart, if we see, we have back-to-back fair value gaps on the daily confirmed. We have a couple of areas of interest that will take our target lower, right? 200%, that's in discount, so that's perfect. As you can see, we will go deep into the OTE of the bigger range. I'll be happy if that happens. I'll not be surprised. Initially, we could basically push higher to this fair value gap, do a retest of this fair value gap, and then go lower. So keep your eyes peeled on this area, right? So let's mark it down as daily fair value gap. So we could go inside of this fair value gap, get rejected, and then go lower. So initial bullish price action is not something that you want to just straight away enter longs on. You want to see whether it is sustained move. What you have around 200 points move, it could happen very well. We could very well catch a long if we get a clear long for this 100 points with a tight stop loss. I would not mind that. Overall, as of now, a little bit of a not, the price is not very clear. You just want a surety. You just want clarity of where price wants to go. The most important part is that we have swept these equal lows. We have taken all the liquidity, and as of now, there is lack of displacement lower. So anytime I see lack of displacement, my mind says, oh yes, reversal. So I am keeping that mind up and running, and I'm keeping that thesis up and running. Now over here, if you see on the 4-hourly chart, we basically left a small fair value gap. We did a retest on that small fair value gap. If you will see here, small fair value gap and a very nice retest of that, and then a bounce off. Now, if we can basically close above this fair value gap at 23,473, we have a nice 150 point move to the upside. We can see whether that plays out or not. Maybe it will, maybe it will not. But yeah, let's keep our eyes open and see what really happens over here. In regards of what else is going on, is we'll have to go to the 1-hourly time frame. 1-hourly time frame, we have back-to-back fair value gaps right over here. The target of those fair value gaps is somewhere around 23,800 area, 23,750 to 23,876 area. I think it can be achieved quite easily if the market does behave properly. Now, how do you know it will? If you see acceleration above these highs, as the market opens in 4 minutes time, if you see acceleration above these highs, that gives you confidence that the price is heading towards this area. You can take a long and you can play it throughout the day, right? If you fail to displace above these highs, that means the market might not be very well in tune to go higher, and you might want to take a short position to create new lows. Both of them are quite okay. If I'm taking a short position, my first TP will be this low right over here for a turtle soup. If the market reverses from there, I want to be stopped out quickly. If the market continues lower, I'll keep basically taking the market down towards this 22,150 area. But that is a longer term trade. That is a trade that you normally would take on your personal accounts, on a CFD account or something along those lines. You'll not be taking it on the futures prop firm accounts. So not for us, for intraday traders, right? But just FYI, if we don't accelerate above this, there's a high chance we go lower, and the lower end targets will be 22,165 area. All right, so moving down, time frames by time frame, 15 minutes. Asia high is gone, London high is gone, all the lows are intact, a lot of equal lows down here, which will attract price. Previous day low is gone, so that's something that you can play. So previous day low was taken at the market open, so that's good. Swept and nice reaction of it, nice acceleration of it. And do we have any sort of measure that we can take from here? So if I want to take a measure from here, this is my manipulation leg. So New York AM high and this area again. So that manipulation leg and this 250 to 200% on the 1-hourly time frame kind of sit together. So that's a good thing that I want to see. So this whole manipulation leg down that manipulated the New York PM low is taking us to around the same area as the 1-hourly time frame. So let's just mark this area out and remove everything from there. Let's go. Uh-oh. Cool. This makes more sense. So ultimate target, let's just write it down here. Initial target on upside. So we are aware of where our initial targets are. Okay, so that's good. All right, so Kumar says we have previous day high SMT as well. Okay, cool. With what? ES? I guess so. No, YM. Yeah, YM has taken previous day high. Others have not. So yeah, I mean, if it plays out, then yes, a short position will look beautiful. So I would not mind that. But yeah, I mean, as of now, Kumar, I'll be very honest. Yes, previous day SMT is there. I would love to trade that. My eyes are set on this. I think all of the assets will go on to take previous day high. But let's see. Let's see. I don't want to say that, oh, this will happen for sure. I will give it time to play out properly. Hello, Ilyara. Hello, user FL7PT8HN3M. That should be ZA for sure. ZA and his account names, I don't have an idea. Previous day low SMT as well. I mean, if there's a previous day low SMT, I think it has already played out. I mean, SMT is very, very discretionary. If you don't have a strategy based off SMT, I mean, it's not really a good idea to trade it. I know it's you. I know. So let's see. Market is open now. I want to see where we want to, how do we want to play this? Okay. Let's see if we accelerate above these highs or not, or we just get rejected from here. Give it like 5 minutes time and just look at the market in 2 to 5 minutes and see what sort of price action do we get and what sort of reactions do we get here to kind of make a decision on how do we want to trade. What's going on with gold though? Nice sweeps on gold. Okay, I like gold. I like gold. Let's see what it wants to do. I'm liking a short position on gold. Yeah, I'll take a short position on gold. I'm liking it. It will be half risk and I'll target these lows that were created. So 2.3 hours or somewhere around here. London, oh no, wait. Don't take it yet. Don't be quick. Yeah, just let it confirm one more thing. So what I would like to see is a closure below this low. If that happens, I will take a short position on gold. What is NAS doing? Just let it play out. I'll just open it over here. Just 23 more seconds and then I'll open a gold position. And if you want, you can also place your stops just above this. So instead of going all the way up, so just place your stops above that. Okay, I'm going to enter a short position on gold. Come on. Okay, cool. I'm in. Nice entry somewhere around here. Let's see. Stops will be above here. Let me put my stops as well first, please. So in a gold position, half risk, stops are above here. If the market reverses, that's minus 0.5 hour. If otherwise, it's 2-hour trade. And I'm not aiming for like too big a move. So I'll let this run and I'll go back to MNQ. Nothing much happening on NQ yet. So I'll open gold here and NQ is open on the side, so that's fine. So I'll talk about why I entered gold once the trade is closed or something. I'll just talk about it. I'll keep an eye on NQ for now. Okay, on NQ, I am liking this. So what I want to see is a push above. If we get a push above, I'll open a long position with stops underneath the body of this candle, and I'll target previous day high. So that will be the trade on NQ, but I want to see a close above this high before I do that. Gold is most likely going to be stopped out, but let's see. I'll let it run. Okay, I'm entering a long on NQ. How much is the stop loss? 54 points. Okay, cool. Okay, I'm in. Entry is somewhere around here. So gold is still going on. NQ is still, this is full risk, FYI. So this is a full risk trade. Stops are under the body of this candle. And you go for 2 hour, like precisely 2 hour, because you don't have the whole luxury of going bigger. If you don't get an acceleration higher, then most likely that would be -1 hour. If both of them get stopped out, that's -1 hour. That's fine. We'll take another stab because that's still under my risk limits. No, both of them get stopped out. It's -1.5 hour. Guys, if you have any questions in regards of any of the trades, please feel free to ask on why we are doing what we are doing. Otherwise, you'll never understand what we are doing. I hope that made sense. Okay, let's go back to 1 minute time frame. Yeah, taken a lot of liquidity though. This one might get stopped out quicker than the gold one, because there's lack of displacement now. So initially these candles showed me, okay, I had a fair value gap, I did invert it, I still pushed higher, and that gave me confidence that okay, this wants to go higher. But this now looks like a lack of displacement above these highs. So you basically are looking at, okay, we were not able to accelerate above those highs. Do we, that the reason we put our stops, that's why we put our stops below this candle and not below these lows, because if the market is truly bullish, the price should not come below this fair value gap and close below this fair value gap again. It should respect it and keep moving higher. If the price closes below this fair value gap, it has basically turned sides, and then it should start to head lower, and then we can plan a short from there. And in regards of gold, the gold trade was based off that we have taken all the London high, but we failed to accelerate above it even once. We were just trying and failing again and again. Maybe could have waited for London Q1 high to be broken below, but I felt it should be fine. So my thesis was that we should be fine, but that's okay. Part of the game. Losing is part of the game, guys. You win some, you lose some. If you don't lose, you never get those big winners as well. It's as simple as that. All you have to do is your loser should be small, your winner should be big. That's the whole game of trading for you. If anybody has any confusion about that, then this game is not made for you. Yesterday I was having a chat with my dad, and he's like, oh, so he likes to play cards, he's a good, he likes to gamble a lot. Not a lot, a little bit. And he was like, oh, trading is all but educated gambling. I'm like, yeah, it makes sense. It is all but educated gambling. At the end of the day, you know your odds, you know what price action is doing, and you base your trades based on on that. And similar to what happens in gambling, in trading as well, you just need to be smart enough to know that okay, I can lose this much, but when I need to make big. And that's what we try to achieve. We risk the same amount every time because we want to make sure even if we are losing a couple of trades, that does not mean we are out of the whole, we can't trade anymore. So that's the whole perspective. That's the whole way of trading. That's how trading really works. Hello, Danny. How are you, man? So gold looks like it's going to it's just chilling in this area. It will push higher most likely. But let's see. I'll give it a couple more minutes. Bureaucracy. Nice. Another nice tap. I'm liking this nice tap into this fair value gap and a bounce again and again from there. Stopped out on gold. So that's minus 0.5 hour for the day. Let me just put it here. Sorry. That was loud. Let's see what NQ wants to offer us. Any questions from anyone, please feel free, guys. Don't be shy. We have more than 20 people watching. Just put your questions in the chat and I will answer. If you don't put your questions there, trust me, you're wasting your time sitting on the stream. You're sitting here to make money, and I'll promise you I'll make you lose money. So if you really want to make money, you have to learn. And if you want to learn, you need to ask questions. Otherwise, if you rely on someone else to make you money, they will never be able to do that, my friends. Good push. I like this last candle, but again, there's no follow through yet. Like the price is failing to follow through properly. That's the one thing that I'm not liking. But yeah, I mean, until we are trading above these highs, I'm okay. I'm quite happy with what's happening. I'm gonna mute my notifications. Too many notifications. What's your HTF perspective for April? As of now, I have to lean bearish. I cannot lean bullish yet because the market has not shown anything to be leaning bullish for April. So I'll be neutral to bearish on April until unless something changes. The trend has been set. We are in the secondary trend for the primary uptrend on the higher time frame. So yeah, neutral to bearish, I think. So when I say neutral to bearish, it's basically simple. Every time you come into the market, you see a short position, you basically go risk on, as in like you take higher risk. If you're seeing a bullish position, you still take it, but you take it lesser risk. When I say I'm pure and pure bearish, what I mean to say there is that I don't want to take a long position. All I want to take is a short position. That is, every time we sweep a high, I want to take a short. So neutral, the word neutral basically tells you that, okay, longs will be acting like this, whether we will be taking that trade in the other direction or not. So every time you create your bias, you should be like, oh, is it clean bearish trend or a clean bullish trend? Or is it a neutral lying bearish trend or a neutral lying bullish trend? So right now, I think we are in a neutral bearish kind of, market. We are bearish, 100% we are bearish, but we are reaching some price targets that, are crucial. So at that time, you turn neutral bearish. Like if I was trading last week, I would be pure and pure bearish because the price targets were getting closer. Any rejection here will be devastating for price action. You want acceleration now. You want price to push higher quickly. If price cannot push higher now, it will not be good, in simple words. Yeah. So let's see. I think short coming soon. Yes, I think so as well. There's lack of displacement, clear lack of displacement, and I was literally just thinking of maybe moving my stops higher, but then I was like, there's nothing that backs it up, so I just want to keep the stops where they are. What's the worst that can happen? -1 hour. That's the worst. I mean, looking at what price is doing, look at every time it's digging into this inverted FEG, how it's trying to push higher every single time. So the first fair value gap of the day, every time price pushes into it, it just goes up. So you just want to respect that, you just want to be like, okay, my stops are below that. If price really wants to turn around and do something stupid, it needs to first invert this area. So you just put your money, you put your stops in the perfect position. So yeah, they just let it do its thing, just wait for it to show you a direction. If it does, then that's great. If it doesn't, if it just keeps doing what it is doing, then fuck you, price. That's the only thing you can tell price after that. All right, let's see what it wants to do. By the way, for people who are planning to get more accounts, Apex is running a 90% off. So do go and get it. It's a good offer at the end of the day. People who are already funded in the mentorship, I think, you are trading on Apex, if I'm not wrong, get some more accounts. It's a good time to get, more accounts. So yeah. I'm trying to see how I can target. I don't have anything to target. Maybe on the 30 seconds. Nope, nothing. There is no targeting available. That's fine. Okay. That's fine. This is better. So I can take a TP here and then previous day higher. Cool. Or if this candle closes the way it is planning to close. Good. Now it makes sense. Okay, with that candle closure, I'm going to move my stops to the low of this candle. I'm going to reduce my risk. So new SL will be the low of this candle. Questions, guys, come on. So many people watching, but nobody has questions. I really don't understand. When I used to be learning, I used to ask so many questions. Like I was like full of questions. Why this? Why not that? Why are we trying to? What are we trying to achieve? Why did you measure that? I mean, there are so many things that are happening on this chart. You should ask questions. That will be my TP1. So that's my TP1. I've taken TP. I'm going to move my stops to break even. So it's right at break even point now. Cool. Right now I'm up some hour. I don't know. I'll see how much later on. I'm not up massively. I'm just up a little bit. I'm going to move my stop loss to the low of this candle in profits, 483.25. Like, it's the reason I'm doing that is because if this market is really turning bullish and wants to go for previous day high, why would it engulf this? It should leave a fair value gap if it is truly bullish, and if it is not, then just stop me out and get out of it, in profits. So we took a TP here somewhere around 1 hour. So yeah, that's fine. I mean, I think I'm up around 0.2 hour-ish, something. That's good. What's my reasoning that we would be bullish for previous day high? The reasoning is very simple. We have already taken previous day low, right? So previous day low was taken and price pushed out of it. So if you'll see here, and then once we pushed out of it, it's basically being accumulating. So Asia was expansive, London was accumulative, and I feel that now New York is going to be expansive on the upside. So it's like the initial template that we talked about, and that's why. Bro, we leaving so many equal lows on the 1 minute, 2 minute. Do we concern? Yes, we should be concerned, but that's why we are moving our stops higher. That is the main reason, Kumar. That's very, very valid thing you said there, that we are leaving a lot of equal lows. And will it be a concern on lower time frame? It will be a concern. But I feel, and this is my analysis, that we will take previous day high and go down to sweep all those lows. So first draw on liquidity is previous day high right now. That's what I feel. I could be completely wrong. In the next 2 minutes, it could stop me out in profits and I'll be out. So out of the two back-to-backs, would one of them or both of them invalidate previous day high target? That's a good question. So for me, this back-to-back fair value gap, how I am seeing it is, this fair value gap, back-to-back fair value gap target has been met. So I'm not concerned about this now. It's done. This is also done. This order block over here. Okay, both of them are out of the way. Their targets have been achieved. The only reason I'm going for previous day high is that that's the closest pool of liquidity to price right now. All the other liquidities are either taken or way too far away. So the price will gravitate towards the closest pool of liquidity first. Once it takes that liquidity, then it can do something else. But price will always travel towards liquidity, not against it. So at this point of time, the closest liquidity is previous day high. Price will gravitate towards previous day high. Once it has achieved that, that's when it can think about, okay, I have no liquidity on top now. Where is the next untouched liquidity? Down below. So I'm going to go there. So that's how price action really works. To go down, it needs to go up first. And that's what we are playing. We are playing the go up first. And then once it decides to reverse, we'll play the go down if we have time. I mean, I might not have time. I have to run away in like 15 minutes max. But that's how you should be seeing this, Danny, if you understand what I'm saying here. So always, whenever you guys are looking at price action, always think of it like, what is the closest liquidity that will attract price? If the closest liquidity is below you, look for shorts. If the closest liquidity is above you, look for longs. So the closest liquidity is where the price wants to go. What people make mistake sometimes is that they look for the most the furthest liquidity, because that gives you the most risk to reward, right? Don't do that. The closest liquidity is your best winner, because price will go towards it very quickly. Once that liquidity is gone, then you have that money shot, because if you got it right, you have a winner, and then you can take that money shot to basically go lower, right? In this case, you could go lower because you got that money shot. I hope it helps you, because it's a lot of people get confused by this. A lot of people don't understand this and get confused by this. I'm going to take a TP here. I know I'm very close to full TP, just reducing, taking a TP and taking some money off. So now I have like 3 contracts remaining. So I'll just let those 3 contracts run. Also move my stops to the low of this candle and move my TP. I'm going to open my TP up. So just an open TP, and I'm going to be aggressive with the TP now. So I've removed my TP completely and moved my stops to 23,515, not the low, sorry, the body low of this candle. Historically, whenever I move my stops, I get stopped out. So play with your own, play at your own risk kind of a situation for you guys now. I don't know why. Whenever I open TP a trade, I get stopped out. I have no freaking idea how this happens every time. But as of now, it's fine. I mean, we have taken 2 TPs. It will be more or less a 1 hour day. I'm quite happy with that. As I said, I'm coming back after like 8-9 days. So these small winners kind of help my confidence, and that will basically in turn make it better. What would be a signal to enter short? Maria, the short signal will be a sweep of previous day high, lack of displacement above previous day high. And then if the previous day high is left untouched, I will not be touching a short. I know it might give you the clearest of indications that it wants to go lower. But for me personally, I need this to be taken for a short position. You understand where I'm coming from? So I'm stopped out on this. I think overall I'm up 1 hour for the day. So let's just update that. I'll just write 1 hour. I think it will be more or less 1 hour. But yeah. So for me, I'll just get rid of all this so that I can explain clearly. So for me, what matters right now is that, yes, the market is accelerating. Okay, it's looking beautiful. I think it's going to go to this initial area that I've marked over here, right? And I will be looking for longs. But the next long that I take will basically look something like this. You have done an initial push, right? Now you go back inside of this fair value gap and this fair value gap. Okay, once you have gone inside of this fair value gap, you have done it. You basically give me a change in state of delivery right over here, from where I can take the trade like this, and I can take it towards 45 for 450%. So these are the trades I'll keep looking at throughout the day. Now, if by any chance previous day high is swept, okay, let's say the market takes previous day high, goes here, and then starts creating lower high and rejects itself quickly, leaves a fair value gap, I will not think about that initial thing that I've put up here. I'll straight away go short, and I will target the lower liquidities with this as a stop loss. And I will be most likely be targeting this equal lows on London Q1. You see, these will attract price, 110%. These will attract price. So this is where I will target, but I will target that only after previous day high is taken, not before that. Do you get my point? So like if you wanted to take a trade now, so this will be the long trade you will take. So you'll place your stops under the body of this candle, and you will basically be targeting 2 hour, just 2 hour. Okay, so this will be the kind of trade you will take. So 2 hour from here, to be honest, I'll take a half risk trade here. little late, but entered. So my entry is just a little bit higher, somewhere around here, and I'll just go for 2 hour. So somewhere until here. So it's a half risk trade, but this is what you will want to see, because there's a change in state of delivery on these candles. Straight away after coming down, we have respected the fair value gap. And then if it goes up, sweeps previous day high, it accelerates higher, we have a target up top. It fails to accelerate, we come down, we have a target down bottom. So we are pretty much clear on where this market might or might not want to go. Okay, so now previous day high has been clicked. It could reverse straight away, right? Or it might just come down, take this fair value, inverted fair value gap, respect it, and then push higher further up. Okay, so keep an eye on what happens here. That's very crucial. And you could have an open, short straight away. So you just need to understand that as markets evolve, as price action evolves, as price action is delivered, you see opportunities and you should have confidence to execute those opportunities. The reason I took this trade is not because I got stopped out and it started pushing up. No, it's because I had a clear plan on where the market wants to go first. I saw that we are giving a change in state of delivery. We are inverting the fair value gap, bearish fair value gap that we just created. And now we are respecting that BPR. So if we push higher, that's great. If we don't, it's a low risk trade. I get out, that's fine. And then I start looking for shorts. Because why do I start looking for shorts? Because previous day high has been taken. So just some clarity and some confidence in your own ability to read the market, and you just trigger based on your rules, based on how you see the market, based on what you like to, what your overall thesis is, and you just play that. So at the next change in state of delivery, either I will be stopped out towards the downside or towards the upside. I'll move my stops to here if I see a change in state now. So let's see what happens. Also, one more thing I want to talk about, guys. Like, look at where I've put my TP. Final TP is right between these areas. The reason is I'm not going for that extensive 400% measured move. I'm going for that 2 hour. I'm like, I need 2 hour and I'm out of the market. So when you're coming back from holidays or when you're coming back from a losing streak, sometimes just going for a dedicated risk to reward is much better than going for an extensive measured move. So sometimes you like, okay, I see this happening. I know this can go here, but I will go for 2 hour and I'll sit out of the market after that. So sometimes that's a better thing to do than just trying to force it to go to a certain target. Just go for 2 hour and get out of the market. And the best thing is if your 2 hour is right in the middle of some high probability area, then you have a better chance of achieving it. So yeah, just my 2 cents for you people, so that you understand how sometimes measured moves are not the best thing to do as well. But most of the time, measured moves are the best thing to do, in my opinion, because you know where the market wants to head towards. So instead of getting 2 hour, if we were targeting this 400%, we would get 2.8 hour. But I'm basically coming back from holidays, and I just don't have the brains right now to wait for that to happen. I still feel it will push higher, but let's see. So we'll give it a couple more minutes and see what it wants to do. What's happening on the 2 minute? Oof, 2 minute looks ugly. 2 minutes looks very ugly. You need an engulfing candle now, the next 2 minute candle to be engulfing. It needs to close somewhere above previous day high. It needs to be a clean move up. Like no wicks, no nothing towards the downside, just push higher straight away. Any other question from anyone? Anyone wants to ask anything? For people who are watching us on Twitter, do join our Discord. It's free of cost. For people who are new and who are not from the Discord, do join the Discord. It's free of cost. Some stupid people talking about trading who don't know shit about trading are on Discord. They love talking to each other. So yeah, please do come. And yeah, that's my 10 seconds of marketing. Not liking it. I'll still let it be open. This will be the last trade. I'll take another trade, but most likely off stream. Once I get more confirmation about what price wants to do. But if I get stopped on this will be the last trade of the stream, and we'll finish the stream around 0.5 hour up. So that's good. Ending the day up is ending the stream especially up is really nice. But till the time we are trading above this area, I'm bullish. Could you teach us the candle formation meaning when you have time? Yes, 100%. We can go over it. Now, as you know, I'm free a little, so I can take out more time to give to you guys. So I'll let the stops do their thing. That is, stop me out from unlimited losses. But yeah, now we are trading below that fair value gap, which is now not good. But let's see. That's me stopped out. Plus 0.5 hour session. I will still be looking for a long position to sweep this high again from somewhere down here or a little bit lower. Once we sweep this high once more, I would then be looking for short positions because it's showing lack of displacement to the upside. But what I want to see now is go up and sweep it properly, like go to this 200% area, right? Once it does that and then it starts getting rejected, that's where I want to short the market, not before that. But yeah, that would be me done for the day, guys. Thank you so much for joining in and giving me 48 minutes of your life and listening to me. To the mentees, I'll see you guys later in the evening today, and for others, I'll see you tomorrow. Take care. Bye bye. Bye guys.